is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Oil surges, stocks drop, treasury yields jump as OPEC Plus cuts production by more than 1 million barrels a day, adding to inflationary pressures. Shares drop in UBS after a Swiss newspaper reports the bank will cut its workforce by up to 30% after completing the takeover of Credit Suisse. Both companies face shareholders this week. And Tesla deliveries hit a record in the first quarter, but fall short of Elon Musk's goal of 50% annual growth. Well, good morning again. First, let's check on the markets. A lot of the focus, of course, is on crude oil. I would say the only focus today should be on what that means for inflation going forward and what, of course, that means for asset classes overall. If you look at treasuries, they're sliding. European energy stocks gaining between 3 and 4%. Oil still climbing more than 5% after OPEC Plus surprised traders with a production cut that now threatens to worsen inflation. So treasuries, I was saying, falling, the dollar actually rising. Energy stocks, unsurprising, are the ones that are gaining the most in Europe. I'm also looking at the 2-year treasury yield. We have the 10-year, but also good to see the 2-year, which is a bit more sensitive. The 2-year yield jumping about 8 basis points, pushing it back to 4.1% as traders weigh the announcement of OPEC Plus. We are also getting that breaking news out of the euro area. Now, we had a drip feed. We had Italy. We had Spain. We had Germany. Euro area March manufacturing coming in at 47.3. A bit better than expected. We were expecting 47.1. Below 50, it does mean we're in contraction territory. And I think Germany PMI, although a little bit backward looking, was also the more worrying one. So European oil stocks trading significantly higher this morning on the back of surging oil prices from OPEC Plus output cut announcement. Now, the cartel is slashing more than 1 million barrels production a day, abandoning previous assurances that it would hold supply steady. Well, here with us, James Heron, Bloomberg's European oil editor. James, thank you so much for joining us. So first of all, the market is trying to figure out what this means longer term. The oil price was, gaining 8% and now only 5% higher.
Yeah, so there's been an initial reaction, obviously, because it was a huge surprise yesterday, a bit of a pullback. So now people are digesting the longer-term impacts for this. What we've been looking to prior to yesterday in the announcement of the cut was a small surplus in the first half, followed by a tighter market in the second half. Looks like that surplus may not happen now. So overall, we're looking at tighter inventories, probably higher prices than previously expected. The reaction hasn't been universally. Not everyone is sort of predicting $100 a barrel now is coming back. But the calculation has changed. And as you say that, people are reappraising their view of inflation and how the Fed is going to have to act on interest rates.
I mean, James, they're making enemies of a lot of people because the economy is already pretty fragile.
Yeah.
And it's quite precocious if you cut production and the price jumps up quite significantly, it could push us back, push us into a recession.
Yeah.
Is this because of politics or are they just trying to defend their treasuries?
Mostly by OPEC. When OPEC acts like this, it's driven by the price of oil, really. They don't say that it is, but it is. Yeah. And their concerns about the strength of demand. And for the inconsistencies about their messaging, they have, the Saudis in particular, have talked about being proactive, getting ahead of weak periods in demand by cutting production preemptively. Yeah. So it appears that might be what they're doing now. But yeah, certainly in the terms of the broader economy, it doesn't help. It means that inflation, which has been driven a lot by energy prices, could be higher. And certainly, if it does cause a recession in major economies, that doesn't help OPEC either, because that will hit oil demand.
So is this actually Saudi Arabia that led this? Do we know yet who is behind it? And could it be because they see a recession and so just want to get up front of it?
We don't know that Saudi Arabia led this because we're still kind of absorbing what happened yesterday. But really, Saudi Arabia dominates OPEC in a way that wasn't true, say, in recent history. In much more of assertive role it's taking. And it's really telling yesterday that, well, today we have an OPEC meeting where they could have done this, but they chose yesterday to actually preemptively do it outside the auspices of OPEC, which I think is quite telling as to really who's calling the shots here.
James, thank you so much. As always, James Heron there from our oil team. We're also getting some news out of Tesla. So we had a a terrific, actually, breakdown of what we heard from Tesla and Elon Musk by Alex Webb from Quick Take minutes ago. Tesla now down 2.4% in pre-trade. Now, for more on the markets, on oil, inflationary pressures, let's bring in Bloomberg's MLive, Van Ram and Freya Beamish, Chief Economist and Head of Macro Research at TS Lombard. Thank you both for being with us. Freya, when you look at the price of oil today, when you look at what we heard from OPEC Plus, does it change your worldview on inflation?
Yeah, it does to a certain extent. The problem is that central bankers probably won't see it in the same way as I see it. So central bankers are very fixated at this stage on bringing inflation down and focusing on what's going to happen to inflation expectations. When I think a supply shock like this, I think, okay, well, prices are going to rise. It's going to destroy demand, and that's going to feed into recession, as you were sort of alluding to. But central bankers are still very worried about these kind of inflation expectations and wage price spirals and trying to put inflation back in its box. So I think the way it's going to impact on yields is going to be feeding through that channel rather than kind of what immediately happens to demand as a result of a rise in prices.
Van, do you agree with that?
Yes, I completely agree with that. Central banks, particularly the European Central Bank, are going to prioritize fighting inflation over saving the economy. From what we got with the PMI numbers just this morning, it shows that the economy is much more resilient than we thought. And even the ECB is going to be prepared to say, okay, we can tolerate some weakness in the economy, but we need to nail inflation down. And last month's inflation print shows that coal prices are rising at 5.7%. That's not acceptable to the ECB, which by its own estimate was expecting 5.3% this year. And with the oil production cut, that's going to be probably revised higher in June. So I think there's a lot more to come in terms of the rate space, in terms of the rate hikes.
Freya, are we now 100% convinced that the energy market is moving back into over-tightening because the spare capacity is gone? Or there's another narrative in saying OPEC is just getting up front of a recession which would have destroyed demand anyway?
I think probably I would fall into the latter camp somewhat more because, we have been calling for a recession this year. And it's not always clear ahead of time what is actually going to cause that. But we do now have a clear catalyst for that recession, which is the SVB and the Credit Suisse shock. Central bankers are still at this stage in the game, very much in the teeth of this sort of dilemma between what's happening with inflation and the cracks appearing in the economy. But I think over time that will turn out to have been a sort of a false dilemma, in the sense that the financial sector and the real economy, which is where inflation is being driven, are not hermetically sealed, which is to say that as the cracks are appearing in the financial sector and the central banks are sort of draining the swamp, but trying to redirect the contours of the swamp, but through the discount window and the new programs to lend to the banking sector, they're continuing to sort of tighten conditions, and they're continuing to make things difficult for the financial sector, which tightens down on the supply of credit to the economy, and that's how you get the economy slowing, and inflation then sort of slowing down after that as well, and sort of bringing out the final COVID distortions out of the equation for inflation. So that kind of dilemma between inflation and the financial sector that we see right now, and probably continuing in the next few months, especially with this an OPEC announcement, that probably does sort itself out over time, but there's probably a lot more sort of volatility that can be caused in the meantime while the dilemma is still in play.
But Freya, is the China reopening a forgotten narrative? And actually, what does that mean to push inflation up? And are you expecting any cuts from the Fed this year?
I think with the China reopening, we will see some strong activity data in terms of Chinese domestic demand. It's more a kind of a release of pent-up demand. It's nowhere near as strong as what we saw in developed markets. There wasn't as much accumulation of savings over the pandemic. And in complete contrast to what happened to developed markets, there's actually been a destruction of wealth in the property market, and also in equities, that more than outweighs all of the saving that has got the accumulation of saving that has gone on over the course of the pandemic. So as a result, what you're left with is a release of pent-up demand in the first half that goes mainly into China services sector, and there's not so much of a spillover into the rest of the world. When we look at the leading indicators for China, of course, my favorite being M1 growth, that gives us very little conviction that you can get continued recovery into the second half of the year. So I don't really buy into the narrative that China is going to be a kind of further source of inflation that developed market economies are going to have to worry about.
Ven, do you look at the Phillips curve, or is there anything else that you look at to, give us an indication of what happens to Fed and Treasuries?
I think what I'm looking at in the immediate aftermath of the banking crisis is the spread between high-yield bonds and investment-grade bonds. Last week, we saw that blowout. In the past 10, 15 days, we have seen that blowout to one standard deviation mean. If it goes back, it's come off now because, we have seen a bit of relative calm in the markets. But if it goes back to 2 standard deviation levels, that would definitely herald a recession, and that would stop the Fed on its tracks from raising rates. I think that considering the calm in the markets, I think they will get to 525 because May is around the corner. They will get to 525. It is what they do in June that is likely to be more interesting because they will have converged on the dot plot for a target of 525 as well.
Freya, this is a big week, of course, not because we're only trying to figure out what this means for the Fed, but also it complicates matters for the ECB. And then you have the Bank of Japan with a new governor in charge. Of course, this is a country that's also extremely, heavy importer of oil and extremely oil sensitive. Out of those 3 central banks, what do you worry about the most?
I think the Fed is really sort of leading the charge. The euro area, the ECB is sort of lagging that story. So what we're seeing is the deposit destruction that's the result of QT and the kind of the sales of bonds by money market mutual funds. This is all sort of draining the swamp, if you like. But as I said, the Fed seems to, at this stage, be able to redirect liquidity within the banking system, funds within the banking system, so that they can continue tightening policy. So that's what's happening with the Fed as far as we can see. The ECB is just sort of the same thing, but lagging behind that situation, and with a stronger small bank sector, because there hasn't been so much of a sort of regulatory creep with regards to keeping the smaller banks in check as well in the euro area, which is to say that the euro area small banks appear to be stronger. With the Bank of Japan, what we're sort of, I hope what they are sort of hoping, I think, is that you do see this kind of path opening up through the middle, where you get a US recession, you get a global recession, and they're able to do their normalization of policy, which I think already is very dedicated to, without causing too much of an increase in yields. Because I think when we look at the Japanese banking sector, when we talk about where there is interest rate risk in the world at large, the Japanese banking sector, particularly the smaller banks, is one of those places. We've written a lot about kind of the external balance sheet in Japan, with a lot of kind of maturity mismatches there, funding in short-term dollar markets and flowing through the Cayman Islands and potentially into China as well. So where you really have a problem is when there's a souring of assets in terms of the private sector, rather than any kinds of problems that we saw with SVB, where the asset in question was treasuries, was government treasuries. So we're seeing prices in treasuries, broadly speaking, decline, broadly speaking, increase, and yields decline, and that sort of solves the problem with SVB. Where you have more of a problem is where there's a sort of a doom loop, and you get sales in the underlying asset that is at question, and that can happen if you have maturity mismatches, as we see in the Japanese external balance sheet. So a lot for ways.
Freya, thank you so much. Freya.
Thank you.
Thank you so much, Freya Beamish, there, Chief Economist and Head of Macro Research at TS Lombard, and our very own Ven Ram. Coming up, UBS reported to slash up to 30% of its workforce after taking over Credit Suisse. We'll have plenty more on that shortly, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, UBS shares opened lower this morning. This as a Swiss lender is reported to be planning to cut as much as 30% of its headcount after completing its takeover of Credit Suisse. Meanwhile, Swiss prosecutors have opened a probe into the deal. Now, for more on all this, let's bring in Bloomberg's Swiss finance reporter, Marion Halftermeyer. Marion, what do we know so far?
So far we know that the Attorney General here in Switzerland has opened an investigation, and that is to say that they are looking for information. They have issued kind of these statements to say, we're looking for all sorts of information. They haven't said explicitly what they're looking for or what they suspect might be wrongdoing. But given that the deal was so hastily made over the weekend in such a fast fashion, there are a lot of questions around, was this the best deal that they could have come up with? And so that's what they're really going to be looking for. Now, we need to keep an eye out for it and see if it develops into a more serious probe.
So what, Marion, when we know, of course, we know that there's the Credit Suisse AGM tomorrow and then the day after it's UBS. What are some of the most difficult questions that they'll get? Is it on job cuts or something else?
So it's interesting because it's been 3 years since they've had an in-person AGM. So this is actually the first opportunity that shareholders will have to actually voice their concerns and disgruntle to the board of directors. So I'm actually expecting a lot of complaining about the leadership. There are some concerns around the pay. So whether or not there'd be an ability to claw back pay that some of the managers, particularly for Credit Suisse, have received over the years because they may have, potentially mismanaged the bank. And then, of course, from the UBS side of things, we will probably see more questions around, what does this mean for the future of the bank and the strategy? So job cuts, what are we keeping? What kind of bank are we now investing in, basically?
Marion, where does this leave us in like 2-3 weeks? Are we going to see just a drip feed of news until we get to really the bottom of what this new entity is going to look like? And we heard in that press conference last week, this could take months.
This could take months. So over the next couple of weeks, we have the AGMs this week. And in the next couple of weeks, we have actually the first quarter reports of both of these banks. So it's unclear exactly how both of the banks will be reporting their first quarter, but that'll be the next stage of news and the next opportunity for investors and analysts to ask questions of the bank's management and see what's going forward. I expect the UBS board of directors and executive management team to make announcements as and when they can. So, for example, last week we saw the announcement of the change of the CEO. Now, were there to be other executive changes, I would imagine they would be wanting to put those out as quickly as possible.
Marion, thanks so much. Bloomberg's Swiss finance reporter Marion Halftermeyer there. Now, coming up, Tesla fails to deliver on deliveries. For Elon Musk anyway, deliveries for last quarter hit record highs but fell short of the CEO's expectations. So we'll have a full roundup on that shortly. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Donald Trump will plead not guilty to criminal charges related to payments made to a porn star when he appears at a Manhattan court on Tuesday. The former US president's lawyer has told CNN that the payments were previously investigated by the Federal Election Commission and Justice Department, which found no violations. Trump says he'll leave Mar-a-Lago at midday today local time to head to Trump Tower in New York. Now, an explosion at a cafe in St. Petersburg in Russia has killed a military blogger known as Vladlen Tatarsky, who supported the war in Ukraine. Russian news agency TASS says an explosive device the size of a bar of soap was hidden inside a statuette presented to him. Russia's investigative committee has opened a criminal case to look into the explosion, which also injured 25 other people. Finnish Prime Minister Sarin Marin has lost a close parliamentary election to a pro-business opposition group. In a tight three-way race, Marin's Social Democrats came third behind the National Coalition and the far-right Finns Party. The National Coalition will need to work with one of the other blocs to form a government. And Parisians have voted to ban electric scooters. According to reports, 89% of those who voted in a referendum called for the battery-powered devices to be outlawed. The move follows a rising number of people killed or injured in the French capital. Critics of the referendum have raised concerns about the low turnout. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now let's check in on some of the stocks on the move. So we're definitely focusing on the banks. UBS firmly in focus after the huge weekend, of course, of news. We also found out separately to the job cuts. So the job cuts were reported by a Swiss newspaper, but we also understand that the Swiss prosecutor will probe the Credit Suisse deal. So UBS down 1.5%, and then the UK government extending a plan to sell more of its stake in NatWest Group for another 2 years. You can see NatWest on the back of it gaining 1%. Coming up, Tesla deliveries hit record levels last quarter. We'll have a full roundup on that. This is Bloomberg. Here are your top stories. Oil surges, the stocks drop and treasury yields jump as OPEC Plus cuts production by more than 1 million barrels a day, adding to inflationary pressures. Shares drop in UBS after a Swiss newspaper reports the bank will cut its workforce by up to 30% after completing the takeover of Credit Suisse. Both companies face shareholders this week, and Tesla deliveries hit a record in the first quarter but fall short of Elon Musk's goal of 50% annual growth. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're getting some breaking news on the markets after the pretty intense weekend that we've all had, after OPEC Plus shocked the markets with a 1 million barrel cut. And, of course, this abandoned previous assurances that it would hold supply steady, posing a new risk for the global economy. So that's giving a lift to a lot of these oil majors. BP gaining 4.3%. I'm looking at Shell, a similar amount higher. Also, the other news we're following is Tesla reporting record deliveries in the first quarter of the year. But the car maker fell short of Chief Executive Elon Musk's annual growth goal. That's despite Tesla slashing prices in an attempt to boost demand. Now, for more on all of this, we're joined by Bloomberg Quick Take correspondent Alex Webb. Alex, thank you so much for joining us. So they're not matching expectations. So they're actually better than expected, but didn't hit the target that Elon Musk wanted.
Yeah, there are two sets of expectations here. There's the street's analyst consensus, which was for about 422,000 vehicles sold in the quarter, just slightly ahead of that. Sorry, excuse me, I'm going to cough. And then there's Elon Musk's own expectations, which were for 50% growth. It was actually only 36% growth. Yeah. So on that measure, it's a bit different.
So what are the implications of the surge? What does it mean for Elon Musk going forward?
Well, the key thing is how they got to that number. And there was a lot of discounting that happened in the quarter in order to get to that 423,000 units. He wants to hit 2 million units this year. If you look at the run rate, you can see they're a bit short of that at the moment. That creates some concern. They'll have to do more discounting to hit that higher number. The consensus is for then the gross margin to come down by about 3 percentage points, which is clearly fairly substantial. And it means then that the pace of profit growth won't be in line with the pace of revenue growth. So
Tesla, I have an eucalyptus. Can you catch it? Because this is great for the voice, actually.
Right, thank
there
you.
You go. Tesla down 2%. If you look at, if Wall Street actually thinks they'll do fine, why do they need to hit the Elon Musk target?
I mean, it is if Elon Musk has that target of 50% growth and he's willing to do plenty to hit it, well, then it suggests he's going to be willing to do more discounting, right? So then it's going to be hitting that profitability, which then obviously feeds down to the bottom line for investors.
But he has a components, like everything's fine. How's the supply chain? Because, again, they hit snags in the past.
Yeah, the main issue previously was in China, was in Shanghai, where they didn't have as much. The factory had to come offline because of new outbreaks of COVID. The suspicion is that, or at least the hope is that they're over some of those problems for now. They have been ramping up at scale. They have got plenty of capacity coming online in Texas, in Berlin, and in Shanghai. I don't think they have any problem producing them. The problem is not going to be supply. The problem is really going to be on the demand side. At least that's what the expectation is from the current standpoint.
Alex, when Elon Musk says, look, we have to slow down with AI because this is dangerous for the sake of humanity, do you sit up and listen?
Yes, I do, but there's also a pinch of salt because, you're never quite sure what other agenda he might have. Don't forget that he was at one stage pretty senior within OpenAI and ultimately left to go and start some of his own things. There are inevitably concerns about the pace of development of AI. As we've seen with so many things in tech, regulation is very, very slow to catch up. Think about the fact that social media has been around for 15 years. We're only now arriving at sort of comprehensive regulatory or laws for how to manage social media. So given the impact that AI can have, I think there probably is good reason to hold things back. Are Elon's we don't know his motivations.
Yeah, that's very fair and well put. Thank you so much, Alex Webb, there with the very latest on Tesla and Elon Musk. Now, we're getting some breaking news. We have UK PMIs. We had a lot of PMI data, actually, out of France, out of Germany, out of Italy and Spain. So the very latest, of course, PMI figure coming in 47.9, better than the previous number, but I think a slight miss to what we were expecting. Again, anything below 50 actually means a contraction. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Chinese chip-related stocks have gained amid optimism that they will benefit from the nation's growing self-reliance push. That's after Beijing launched a probe into imports from Micron, America's largest chip maker. The Chinese government says it wants to ensure the integrity of its information infrastructure supply chain, citing national security concerns. Now, Endeavour Group is said to be nearing a deal to acquire World Wrestling Entertainment for about $9 billion. Endeavour has been pursuing WWE for the past few months, eager to combine the wrestling league with its Ultimate Fighting Championship. Vince McMahon, WWE's controlling shareholder, is likely to remain involved in the business after the deal is done. Mitsubishi UFJ is delaying a planned sale of AT1 bonds following the global sell-off triggered by write-downs at Credit Suisse. The Tokyo-based bank will now go ahead with a two-part AT1 offering in mid-May after previously looking to sell the notes this month. The decision comes after another Japanese bank started sounding out investors on pricing levels for ITS AT1 sale. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Coming up, we speak to one of the UK's most prominent investors who correctly predicted the 2008 financial crash. Our interview with Jim Mellon of Burn Bay is next. This is Bloomberg. Oil has surged at the week's open after OPEC Plus blindsided markets with unexpected crude output cuts, threatening to tighten markets and delivering a fresh inflationary jolt to the world's economy. Well, let's bring in one of the UK's most prominent investors who famously predicted the credit crunch during the global financial crisis. We're joined by Jim Mellon, chairman of Burn Bay, who joins us now. Jim, great to have you in the program. Thank you so much for coming in. I mean, there's so much going on. I know we want to talk a bit about, some of your exploit, which is agriculture and also rejuvenation. But overall, when you look at the price of oil and what we've lived through, what does it mean for the UK economy?
It's kind of a mixed picture. I mean, gas, I think, is more important to the UK economy, and the prices are, down sharply, so that will have a positive effect on inflation. This oil move, I think, is temporary. I think it's going to slip back a bit. Okay. But it's not great, obviously. However, I think that service inflation is the real issue in the UK at the moment, not goods price inflation. And we'll see, I kind of agree with the government that we'll see inflation falling rapidly by the end of this year, and the same in the States.
Jim, when you look at the UK overall, is it investable right now?
I think it really is. I think the UK is much more resilient than most people thought, and you saw lots of negative forecasts in the middle and the end of last year, and they've proved wrong, actually. I think the tax take is too high, and they'll have to address that. Yeah. But generally speaking, I think the UK will do quite well this year. It won't be the lowest growing G7 economy. It may actually grow rather than shrink. And so I'm relatively positive on the UK, and the stock market is about 30% discount to other major markets around the world.
So what do you think it has most going for it? And I know when you look at the banks, certainly it seems like a beacon of stability, given how the Bank of England and the government also dealt with SVB UK.
Yeah, I think the banks are great. I mean, I think Lloyd's, for instance, is a real strong bank and is a good share to buy. I think that some of the commodity plays that are dominant in the UK market are also good buys, including BP and Shell, for instance. And I think we've got some very good consumer companies. We don't have enough tech companies, we know that. We don't have enough growth companies, but I think over time that will be amended and the UK will look once again quite investable. And the stability of the last few months is actually beginning to attract investors. You can also see sterling going up to 123 today, which is remarkable compared to where it was under Truss and Kwarteng not so long ago.
Do you worry about Bank of England policies going forward, given it's a tight labour market and actually it's quite difficult also to find talent and staff?
Yeah, but it is everywhere, right? So there's quite a lot of net migration to the UK. I mean, it's about 500,000 last year. I think that's a positive, and we should look to have that again this year. They may not all be the skilled people that companies are looking for, but over time they will develop skills. I think the Bank of England is doing okay. I wouldn't say it's brilliant. It was a little bit behind the curve. I think we've seen the peak of interest rates in the UK, and we'll see them slightly coming down by the end of this year, only slightly though.
So where's your main focus now and where you want to be invested in?
Well, I'm very keen on the new agricultural revolution, and
which is eating better. I mean, just so, because we've spoken about it in the past, it's basically eating healthier, less meat, and the way we do things going forward.
Yeah, exactly. It's better for the planet. 1/3 of all emissions come from intensive farming. That's unacceptable. We've got to do something to reduce that. And you can't just reduce it by giving cows pellets to reduce methane emissions. You've got to have a root and branch approach to it. I have to say, though, this will be a multi-generational thing. It will take a very long time to change eating habits and also to change the food supply. But it's happening, and I'm really keen on it, and I'm an early-stage investor in this, and I'm very positive about it.
In the UK, Jim?
In the UK, to a limited extent. We're starting new companies here in the UK. We will have the first cell-cultured product on the market in Europe by the end of this year in the UK with our dog food. As you know, I love dogs, and I know you do too.
You have about 8 dogs.
We have 7.
7 dogs.
2 of them are in London at the moment. And so we will have a cell-cultured product for dogs by the end of this year, which is remarkably fast. It'll be a chicken product. And pet food makes up about 25% of the UK and US meat market. So it's a very, very big factor. Yeah, it does, yeah. And it's growing much faster than the human consumption of meat. So we need to do something about that. And it's the worst kind of meat, as you know, generally speaking. So we'll have the first of that. We're already selling leather, to the luxury good companies, made in laboratories.
And this is what research, I mean, this is something I guess that Stella McCartney, right, started a couple of years ago. Do you see the demand for these products really rise exponentially?
Yeah, well, the demand will rise as the prices come down. Right. And so I've coined this phrase Moore's Law, which is a riff off Gordon Moore, who sadly died last week's Moore's Law. Yeah. And actually, the curve is even better than Moore's Law. So you're seeing the prices coming down faster than with Moore's Law in semiconductors. So the price of a burger patty, has come down from 250,000 euros 10 years ago to about €6 today. And so it's only one way. And ultimately, this food, which is much better for the environment, for human health, etc., will be cheaper than the conventionally farmed food we have at the moment.
But Jim, are you trying to, when you look at Nestle and some of the big players, are you trying to rival them, or the idea is to be an early stage investor and then hoping that this gets sold off to the big ones?
Absolutely. So as you know, in the last 20 years, I've been involved in biotech, and the idea is you start a biotech company, you sell it to big pharma because they're the marketing experts and they've got the distribution. It's the same with these companies. I think most of them will be bought for their IP and their know-how. Yeah. And all the big companies are circling around looking at stuff at the moment. And some of them are buying into these companies, which is terrific.
And where's the test market for this? Is it the UK or the US? The US, especially, I imagine the West Coast, is more advanced.
Yeah, so the milk products are already on sale in the US. Chicken has just been approved by the FDA in the US. Egg substitutes are being made in the US and sold in the US, and collagen is being sold in the US now. In Israel, Singapore are also selling these products. They're on sale, but of course they can't make enough of it, so they're a very, very small supply. Here in the UK, there's been an issue with GMO because of the European Union, but actually I think the UK is going to move to be broadly accepting of GM. GM doesn't account for very much of this, but accounts for a little bit, and in the production process of some companies it's important. So it's important that the UK changes its laws to encourage more investment in this area. We import half of our food in this country. We don't need to. We could really become quite self-sufficient if we embrace this technology.
Jim, what about biotech? So I know you've been, a long-term investment in biotech, looking also at the population that's getting older. Is it more attractive now post-COVID as we have different technology?
Yeah, I mean, biotech was absolutely crunched in the last market downturn. Some stocks are selling at below their cash values. And so there's great opportunities in biotech. You've got to be highly selective and broadly diversified. But I think the longevity science is beginning to take hold. In Altos in Cambridge, Jeff Bezos puts in $3 billion. That's a great sign. Calico in Google has had $2.5 billion. As Turn Bio's had $180 million from Sam Altman. And we've raised about $400 million for our company, Juvenescence. So in the next 10 years or so, I hope something will come along to keep me alive and you alive in better condition than what we imagine old age to be, and so we're all at the inflection point there, I would say.
Jim, we talked a little bit about the banks in the UK, but overall there's a banking crisis, and it's unclear across the world whether this has further to run or not. Does it have an impact on how you can attract investments?
Well, only, I think, rising interest rates have an effect on attracting investments. The banks know, but I was shocked by how many tech companies here in the UK and in the US had all their money on deposit with Silicon Valley Bank. I never even knew about that bank before obviously it all blew up.
So many people said that, saying like, wait, what was the SVB? And because it was big, but also quite niche in who it was servicing.
Yeah, but they had all the money there. I mean, they didn't diversify it. So I think for any tech bros out there, get several bank accounts. Don't just have one.
I know, but when you start out, right, and you must be facing this all the time, when you're your early seed investor, you see companies that could become bigger very quickly, but at first, without that proper infrastructure, it makes sense that you only have one bank account, right?
Well, I think if you've only got a couple of $1 million, yes, but some companies had as much as 500 million on deposit with SVB and hadn't diversified. It was actually shocking to us. A couple of companies we invested in had that situation. We thought that was it for them, but luckily the US government and the Fed in particular was really, really generous.
Do you worry about moral hazard with banks in the US, or does it not really?
Yeah, I think the US is the most fragile because it's got so many regional banks, 4,300 banks in total, and surely half of those have got to be merged or go under in the next 20 years or so. It's just inefficient. Here in the UK, we have a monopolistic banking, well, not monopolistic, oligopolistic banking system, largely speaking, and so the big banks are very well capitalized, and they ran through this very easily, basically.
Jim, when you look at inflation and, leaving all the central bank to one side, what does it mean as an investor?
Well, inflation means higher interest rates, so you have to accept bigger discounts on PE ratios if you're a company. And at the moment, the US market's selling about 18 times. Here in the UK, it's between 12 and 13 times. The UK seems eminently investable to me. The US seems priced to perfection. And profits are beginning to fall. The profits of $3 trillion in the US economy are beginning to go down. They've gone up exponentially over the last 20 years, and they're beginning to go down, and that's not a good signal for the stock market.
Apart from the UK and the US, is there anywhere else where you're investing?
I think emerging markets look very attractive. Vietnam, as a substitute for China, looks particularly interesting. I think Hong Kong as an entry point to China looks interesting at the moment. The Philippines and Indonesia are interesting. And these countries, in contrast to the past, have been weathering the storm of currency fluctuations, rising interest rates, and so forth. So actually, I think emerging markets are somewhere that everyone needs a part of their portfolio. Furthermore, I think gold is very investable at the moment, and gold's about to make a breakout, in my opinion. Central banks are buying a lot of gold. They will continue to do so, and we've got to be somewhat concerned about inflation being embedded for a longer period. So every investor should have some gold exposure.
Jim, thank you so much for joining us. Jim Mellon there, chairman of Burnbay. Don't go anywhere, because we're also doing a podcast.
Oh, we are.
A little bit later. So coming up, former President Donald Trump heads to New York today for his arraignment. Officials set to close key streets in Manhattan as the city braces for protests. We'll recap everything you need to know ahead of the hearing, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Donald Trump's lawyers says the former U.S. president will plead not guilty when he appears in court tomorrow. That's after a panel voted to indict Trump last week in relation to allegations surrounding hush money payments to porn star Stormy Daniels. Well, for more on all of this, we're joined by our Bloomberg senior editor, Bill Ferries. Bill, how have the president and his supporters reacted to the news?
Well, they've reacted essentially in two ways. One is they've said that the indictment proves that the legal system's being weaponized against them, and they have vowed to fight the charges and said the president will plead not guilty. They've also done quite a bit of fundraising. The president's campaign announced over the weekend that they had raised $4 million in donations in the wake of that indictment. And 25% of those donations, they said, were from new contributors. So they have really tried to rally their core base ahead of this arraignment, expected, I think, on Tuesday afternoon, and to use it to bolster their case that the president is being attacked for his political views.
So, Bill, how will this play out in coming days?
Well, the president's lawyer has said that he will fly to New York on Monday. He will go to before the judge on Tuesday, and that's where he's going to get fingerprinted. That's where he's going to have a mugshot taken, and that's where he'll get to enter a plea for the charges, and where we'll finally get all the details of what those charges are. Now, we also have some exclusive reporting that the president's lawyers are considering petitioning to have the case moved from Manhattan to Staten Island, where they may be able to get a more politically friendly jury. People who have looked at that issue in the past have said it's unlikely that the judge would grant that, but it's something the president's lawyers are discussing now ahead of this arraignment on Tuesday.
So, Bill, how has Trump used the indictment to boost his campaign funding?
Well, you've already seen emails going out and posts on his Truth Social network, but he's been reaching out to the long list of email supporters he has, asking for contributions to help him fight these charges. And the president, the former president, has long said that he views he thinks there's a deep state of Democrats and opponents going after him, and that this is his supporters' chances to fight back by donating to him and by helping bolster his campaign.
As always, thank you so much, Bill Ferries, there with the very latest, of course, on the indictment. It will certainly be a busy week. This is the picture for the markets. When you look at oil jumping on that surprise OPEC plus cut, oil climbing more than 5%. Actually, after we heard over the weekend that OPEC plus surprised traders with a production cut that really threatens to worsen inflation. Treasuries actually falling, the dollar rising. And when you look at the energy complex here in Europe, BP gaining some 4.1%, Total also gaining some 4%. The other big story we're keeping an eye on is, of course, what's happening in the banking sector. I look at UBS. The biggest story so far came from a Swiss newspaper, Sonntagszeitung, saying that about 30% of jobs will go. Also, separately, Switzerland's top prosecutor opened a probe into the takeover of Credit Suisse. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller in New York, Anna Edwards in London, and this is Bloomberg.
Inflationary pressures are still there. I mean, we're seeing OPEC cutting production, and that means that if we don't see this big slowdown in economic growth as a result of the issues in the banking sector, then we've got a new constraint on the global economy, which could mean that inflation remains higher for longer.
This measure does send a pretty strong signal to the market that they're going to support prices, support the market in the shorter term.
These type of movements that we see this morning in the oil market, they don't really have an impact, a big impact on core inflation itself, and so therefore they typically do not result in any monetary action.
This is Bloomberg Surveillance Early Edition with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today.
OPEC Plus blindsides the market. Oil prices jump after the coalition announces surprise production cuts of more than 1 million barrels a day. Employees will pay the price for the UBS takeover of Credit Suisse. Up to 30% of the staff reportedly will lose their jobs once the deal is completed. And Donald Trump's lawyer says the former president will plead not guilty at Tuesday's arraignment. His legal team will also seek to have the case dismissed. Well, happy Monday. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, in for Anna Edwards. Matt Miller is in New York. Matt, I was really looking forward to joining the show this morning and having just a really boring start to the week. But then OPEC Plus decides to cut 1 million barrels yesterday, and it's not so boring anymore.
Yeah, no, I think it's pretty awesome. I mean, it gives us something to talk about. It may not be great if you need to pay the price at the pump, or if you need to pay the price for barrels of oil to fuel your factories. We do see S&P futures down on this news, about 0.2%. Not really dramatic moves in terms of stocks. You have the 10-year yield climbing 6.5 basis points, but getting right back to where it was, Friday morning at this time, 353, not even back to that level. We were looking at 355, 356 most of last week. NYMEX crude is where the drama is, and of course across the crude complex, you'll see it in Brent as well. NYMEX, though, up 5.5%, 79.79 the level, so right up at that $80 a barrel level. And you're going to see this causing huge moves in markets, for example, obviously in Europe, where oil producers are more heavily weighted. You'll see gains on the indexes, and anybody related to the oil complex here in the U.S., especially service providers, are doing quite well today. Bitcoin is interesting, up more than 1% at 28,360, so back up over 28,000. Now, you hear a lot of people consistently telling you there's no liquidity, but somebody's lifting the offer on this, and its stability is pretty surprising, I think, to a lot. Take a look at what's going on in Asia. You had gains overnight on the MSCI Asia Pacific, well, actually unchanged at the close. Hang Seng up about 0.04%, so also unchanged in Hong Kong, but the Nikkei gaining more than 0.5% in Tokyo, and the dollar gaining some strength against the yen there. You have seen the Bloomberg Dollar Index putting up some gains. That sometimes is a headwind for equities, although the gains aren't very strong. The Bloomberg Dollar Index only at, I think, 1232 right now. Take a look at the moves in oil really affecting European markets. Danny, what do you see?
I got to say, Matt, I'm surprised more indices, regional benchmarks aren't down. I would, of course, expect something like the FTSE 100 to be up this morning, which it is, up 0.8%. And even France, considering we have a lot of those oil companies live there. But even the DAX has started to move higher. That's up 0.1%. It did start the morning down because of higher oil prices mean more inflation. It means more hikes from the ECB, thus stocks fall. But we, of course, remember that the European session needs to play a little bit of catch up with the U.S. on Friday, which overall had a good session. Here's where the winners are. It is in the Stock 600 Energy Index, up more than 3.5%. That's on track for its best day since November of last year. Meanwhile, you are looking at yields moving higher. German 2-year yields are up 7 basis points, but I got to say 7 basis points, that's nothing considering when we've seen moves of 20 basis points either up or down over the past 2 weeks on a single day. So yes, higher, but calm overall. Matt, you mentioned a stronger dollar. That's not necessarily playing out in the euro, just considering, again, the inflationary dynamic in Europe. If the ECB has to hike more, maybe a stronger dollar can't play out there. It is a little bit stronger versus sterling. Cable is down this morning, just 0.03%. But it does make sense to see some dollar strength if yields are moving higher. And then that goes into jobs day on Friday, where FX is really the only market open. So potentially a way to play this, Matt, is through the dollar.
All right, really interesting stuff there, and we're going to continue to follow these moves in oil right now after the surprise cut that OPEC Plus announced yesterday, more than 1 million barrels a day. And if you factor in, cuts that were supposed to come into play in a month or so, it's going to be a couple months, it's going to be 1.6 million barrels a day. The coalition abandoned previous assurances that it would hold supply steady, period. For more, we're joined by James Herron, Bloomberg European oil editor. James, why did OPEC Plus make this surprise production cut, even after it kind of promised that it wouldn't, didn't it?
It did, yeah. It had said that it was going to stick to its production plans till the end of the year. What seems to have changed is a bit of doubt about the strength of oil demand. At least in the first half of the year, it's looking like there might be a bit of a surplus. Inventories could be building, which has had an impact on prices. We're off the lows we hit last month, but prices are still down from where they were late last year. So that seems to have been the driver in this case for this decision.
How sticky does this move look? Do you think 5% gains in oil, will that hold?
Very possibly, yeah. I mean, it's fallen off from it was up as much as 8% earlier this morning. But looking now, especially into the second half of the year, the market was already looking a lot tighter. There were some traders who were predicting we could start going back up toward $100 even before yesterday's cut. Now the second half looks pretty tight. And of course, a lot of it depends on what happens with Russian production, which is subject to sanctions. So that's a wild card that even OPEC really doesn't know the answer to.
Yeah, Goldman Sachs certainly putting $100 a barrel back into view for 2024. James, thank you so much. That's Bloomberg's James Herron. UBS reportedly will cut its workforce by up to 30% after completing the takeover of Credit Suisse. That's according to a Swiss newspaper. The paper also said as many as 11,000 employees will be laid off in Switzerland and another 25,000 worldwide. Joining us for more is Michael Moore, Bloomberg managing editor for finance. So, Michael, these cuts, I mean, we're talking really large numbers here.
Yeah, and I think that's reflective that this was a very large deal. UBS has said they want to reduce their staff costs by $6 billion over the next several years from the combined entity. So that would lead you into tens of thousands of job cuts. And, there is a lot of overlap in some of these businesses, whether it's the investment bank or wealth management. When you combine the two largest banks in this country, that's going to lead to.
It looks like, I don't know if did your microphone slip out? Maybe it came unseated there. I wonder where the job cuts are going to be, Michael, if you're back, if you can tell us who's going to lose a job here.
Yeah, I think we've seen a number of areas where there could be cuts, whether it's investment banking, whether it's wealth management. Even in Switzerland, there is a lot of overlap between these businesses. So, if you look at, say the research arm, there's often analysts at both companies covering the same industry. So that could be one area. So I think it'll be fairly global and across the board.
All right, Michael, thanks so much for joining us. Bloomberg's Michael Moore covers banks for us out of London, and this is a story that we're going to continue to follow. Donald Trump's lawyers say that former U.S. president will plead not guilty when he appears in court tomorrow. That's after a Manhattan grand jury voted to indict Trump last week. His lawyer, Joe Tacopina, spoke on CNN yesterday.
The team will look at every potential issue that we will be able to challenge, and we will challenge. And of course, I very much anticipate a motion to dismiss coming because there's no law that fits this. Somehow, a state prosecutor has taken a misdemeanor and tried cobbled together to make it a felony by alleging a violation of federal campaign violations, and the FEC said it doesn't exist.
Bloomberg's Kriti Gupta joins us now from outside the Manhattan DA's office. So, Kriti, what's the current state of play?
Well, you just saw exactly how you do see the Trump defense really planning to play this. What's interesting here is the expectation was that we didn't actually know what the charges are. We're still waiting for anywhere from 24 to 30 actual charges. They are still under seal right now. So a big part of tomorrow's potential arraignment is going to be what exactly is he going to be charged for. Right now, for our international audience, all we know is that there is enough evidence, according to a grand jury, that there is going to be enough to take this to trial. What's important to note here is simply that the Trump defense is not going to try to dismiss it. They're not going to try to remove the judge in charge. Juan Merchan is his name and has been ruling over for other cases with the Trump organization as well, something that President Trump has very openly said, Juan Merchan hates me. Yet you do see the Trump defense really playing this cool and saying, look, we are going to wait and see how this unfolds. The prosecution, on the other hand, really looking to target that $130,000 alleged hush payment money made to adult film star Stormy Daniels, among others as well. And that's really the game changer here, Matt. The idea that this court case has been kind of taken by several lawyers around. Alvin Bragg was the real kind of game changer here because he was able to say, well, maybe we might be able to flip Michael Cohen, someone who's worked for President Trump, as the star witness, someone who actually executed that payment. And that's really what we're waiting to see, and waiting to see how this unfolds in tomorrow's arraignment.
Speaking of how it unfolds, could you take us through the next hours, the next days? What comes next?
Well, so like I said, the arraignment is going to come out tomorrow. It looks expected in the afternoon, but I think the real takeaway here is that you're not going to necessarily see your traditional perp walk, for example, not necessarily expect to see handcuffs placed on President Trump for security reasons, just given that he is, of course, the former president of the United States. The real game changer might actually be his comments that are going to come later in the evening. The press office of Donald Trump has said that he's going to make comments at about 8:15 New York time tomorrow night from his Mar-a-Lago estate. So what it seems like is going to happen in the next 24 hours, or next 48 hours, I should say, is that he's going to come to Manhattan, get kind of the arraignment, get perhaps the next steps for him and his team, but then eventually make a quick exit and go back to his Mar-a-Lago estate.
All right, Kriti, thanks very much. Bloomberg's Kriti Gupta there outside the Manhattan DA's office with us all day on President Trump. Now, let's take a look at some of the stocks that are moving in the pre-market. There are a lot to choose from. World Wrestling Entertainment is one. WWE falling 2.5%, a little bit more than that in the pre-market, after it's been said that Endeavor is near a deal to buy WWE for about $9 billion. This, according to people familiar with the matter. It's possible these talks could still fall through, they added, but we also didn't get any comment from Endeavor, from WWE, or McMahon, Vince McMahon. They all declined to comment. Still, Endeavor has been pursuing WWE for a few months. It's obviously eager to combine the Wrestling League with the UFC, the Ultimate Fighting Championship that it owns, and become the undisputed king of combat entertainment. Although I guess the NFL kind of has that as well. Tesla is moving. It reported deliveries that were up 36% in the first quarter, 422,875 deliveries. That's a record, and it's actually better, a little bit better than the street's estimate, but it does fall short of Musk's goal, Elon Musk's goal of 50% annual growth, so they're going to have to start cranking them out the rest of the year if they want to get to that 50% level. Investors are voting with their feet here. The share's down almost 2%. You've also got Apellis Pharmaceuticals, a biotech firm focused on rare diseases and ophthalmology, moving a lot in the pre-market, rising more than 10% after people familiar with the matter say it's drawing takeover interest from larger drug makers. The company is speaking to advisors to consider its options. It may also consider seeking partnerships or licensing agreements for some of its ophthalmology products, but the people who work within or near this company or the other companies asking not to be identified because it's confidential information right now. Still, those shares are up 10%. Danny?
Matt, I can't decide whether the NFL would be happy or sad to know that they've been called the king of combat
Is it
sports.
not? It feels like a combat sport to me. I've always felt that way.
It does.
Yeah.
I mean, if you're head to toe in padding, yeah, combat sport. I'm with you, Matt. All right, I digress. Coming up, we're going to have more on the surprise cut from OPEC with Carole, Nakhle, the founder and CEO of Crystol Energy. And on Donald Trump, Greg Valliere is going to be speaking to us, Chief US Policy Strategist at AGF Investments. Plus, later today, St. Louis Fed President Jim Bullard speaks with Bloomberg's Mike McKee. 8:30 a.m. if you're in New York, 1:30 p.m. if you are here in London. This is Bloomberg.
Welcome back to Bloomberg Surveillance, the early edition. I'm Matt Miller here in New York. Danny Berger with us out of London. Anna Edwards is off this week. We are looking at a real bifurcation here, to use an official surveillance term. The big tech stocks, the S&P 500 tech stocks, have rallied about 20% since, October 14th, I guess. This is a normalized chart, right? Versus the small tech stocks, the Russell 2000 tech stocks. They haven't done nearly as well. And the difference really came at the time of the SVB collapse. So big tech is really ruling the roost here. Joining us now is Simon White, Bloomberg macro strategist, to talk about what we've seen in these markets. And Simon, I took this because your argument is just a few big tech names are making up the rally. The rest of the market is pretty flat.
Yeah, I mean, it's surprising just how narrow the leadership is. I mean, you can narrow it down to the three biggest companies in the S&P have pretty much driven, like they're up 20% on average on the year, and the rest of the 497 stocks in the S&P are flat. So that's incredibly kind of narrow leadership. And that's kind of what we were seeing, obviously, way before the pandemic, and even in the pandemic, 2021, when tech was, showing the great leadership. But for me, it's kind of quite surprising because it's kind of the market's kind of saying that inflation's yesterday's problem because the tech stocks are very high duration. And what were happening when inflation was rising was that tech stocks were lagging and energy stocks were leading. Energy stocks, for instance, have a very low duration. So it feels like the market is kind of moved on from inflation, which I think is perhaps premature.
What about the argument, though, that the Fed did break something? We had the banking stress. The credit environment's going to get tighter. Inflation is taking a backseat.
Yeah, temporarily, I guess you can make that argument, but that's very much a trade, not an investment. So again, I'm kind of surprised at just how much gung-ho kind of attitude there is in the market. It can flip from one extreme to the other. So I kind of see that as kind of like overall reasons to be leaning towards bearishness. But, I think as my argument really was, just because it's easy to find arguments to be bearish doesn't mean that's what's going to happen. Of course, what the market's doing now is rallying. And I think you have to look at the other side of the case, which is very simple measures of looking at the market, take an Occam's razor approach on price-based measures. Like the medium-term trend of the S&P is in a positive trend right now, and it has been since February, and the market's going up. So sometimes, you have to be, regardless that you can have all these reasons to say that why the market could go down, you have to sometimes stand back, look at the purity of price, and it's telling you something different.
Yeah, maybe don't fight the trend. About a minute here, Simon, but what tends to break that? What tends to break the psychology of just dip buying working and continuing to chase gains when maybe the macro environment doesn't lend its hand to that?
Yeah, I mean, it's continually what we've seen is that central banks have to come to the rescue in some way. So this time's kind of interesting because they directly broke it and then they came back and tried to fix it. And it feels like that sort of burst of liquidity that we've had, or sort of less QT, if you like, has had the similar effect that it has had in the past, where people have still got the buy the dip mentality. The central bank's got your back. But I think progressively, as that keeps happening, we'll get closer and closer. The diminishing returns from central bank large S will start to be questioned. And I do feel, because we've now got inflation, which is telling you that the pressure valve, if you like, of the system is under a lot of pressure than it wasn't under before, then I don't see how that can continue ad infinitum.
Yeah. At some point, gravity takes hold.
Exactly.
Again. Simon, thank you so much. As always, that's Bloomberg's Simon White. And for more market analysis from Simon, the rest of the MLive team, MLive Go is where you want to head on your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Danny Berger in London. Anna Edwards is off this week. Now, keeping you up to date with news from around the world, here's the first word. The U.S., South Korea, and Japan have begun naval exercises off the Korean peninsula. It's a move certain to anger North Korea, which fired its first missile over Japan when similar drills were held last year. The two-day anti-submarine and rescue maneuvers started today. They include vessels from a U.S. aircraft carrier group. The U.S. and the European Union are wrangling over green subsidies to try to avoid a trade war. The EU is unhappy with President Biden's Inflation Reduction Act, saying that the law's bias against European companies when it comes to subsidies for clean energy is unacceptable. The two sides are negotiating a limited critical materials and minerals deal that may help ease tensions. In Finland, Prime Minister Sanna Marin has lost to a pro-business opposition group in close parliamentary elections. Marin's Social Democrats finished in third place, with the center-right National Coalition declaring a victory. That puts Petteri Orpo on track to become prime minister. He's overseeing the finance, interior, and agriculture portfolios in 2 governments. And former Arkansas Governor Asa Hutchinson is entering the race for the Republican nomination for president. Hutchinson has been critical of former President Trump. He told ABC that people want leaders that appeal to the best of America and not simply appeal to the worst instincts. So the lowest common denominator there. Coming up, more on the surprise cut from OPEC with Carole, Nakhle, the founder and CEO of Crystol Energy.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. OPEC Plus blindsides the market. Oil prices jump after the coalition announces a surprise production cut of more than 1 million barrels a day. Employees will pay the price for the UBS takeover of Credit Suisse. Up to 30% of the staff reportedly will lose their jobs once the deal is completed. And Donald Trump's lawyer says the former president will plead not guilty at Tuesday's arraignment. His legal team will also seek to have the case dismissed. I'm Danny Berger in London. Matt Miller is in New York. Anna Edwards is off all week. Matt, these markets moving on OPEC plus cuts, but I gotta say, I don't know how convinced I am that this move will have ramifications beyond oil, because yields look, they probably already had to go higher, considering the ground we have to make up for what happened after SVB's collapse and all the banking chaos that ensued.
Well, if they had to go higher already, they're going to go much higher now, assuming that these OPEC plus nations have the discipline to carry through these cuts. Take a look at what's going on in terms of market reaction. S&P futures are down. It's only 0.1%. So, Danny, I guess the market isn't as spooked. Let's see. You're not spooked and the market's not spooked that much. So you can see that we have the 10-year yield rising here, but it hasn't come up substantially, really not even to the levels that we saw Friday morning. And before that, all week we were at 355, 356. We dipped down, obviously, at the end of last week, at the end of last month, and at the end of last quarter, which all happened obviously on the same day. And we've come back a little bit, but not too much. NYMEX crude, this is where you're seeing the bulk of the reaction. This and oil producers and oil field services providers are doing very well in the market, in the pre-market this morning. But NYMEX crude up 5.5% to almost $80 a barrel, 79.82. Obviously, WTI and Brent are rallying pretty hard on these cuts. And you see Bitcoin holding up above 28,000, not related. Even as dollar strength comes into the market, you still see Bitcoin holding up here, 28,376. Take a look at the pre-market movers. First, we'll do those not related to oil. WWE down 1.4% after news that Endeavor is nearing talks to buy it. Of course, Endeavor's been after it for months. The price tag could be $9 billion, according to people familiar with the matter. Maybe that's why a little bit of air coming out of the stock right now. We didn't get any comment from representatives for Endeavor, for WWE, or for Vince McMahon, but we know that Endeavor's been wanting to put this together with its UFC. Tesla is off more than 2% after coming out with deliveries in the first quarter that were up 36% and at a new record, and that beat the street, but it still is shy of the 50% annual growth goal that Elon Musk has stated time and time again. And as such, the shares are reacting negatively. Apellis Pharmaceuticals up now 14% in the pre-market. It's focused on rare diseases and ophthalmology. It's getting interest from larger drug makers, according to people familiar. That could mean a sale. It could also mean a partnership. It could also mean licensing agreements. They tell us they decline to be identified because they don't want to release their names connected to confidential information. But as a result, you can see these shares really rallying. The oil movers, the oil patch is where you see a lot of reaction, obviously, to the OPEC Plus surprise. And as I say, services providers like Halliburton gaining big, 5% in the pre-market. You also see Schlumberger up 4.33% in the pre-market. And then, of course, Marathon, Apache, and you'll see a ton of other oil producers, E&P plays gaining on this as well. Danny, what do you see going on in Europe?
easily the best performing sector is energy, much like the pre-market picture in the U.S., Matt. None of these other individual sector groups are up really 1%, and yet we have the stock 600 energy sector up more than 3.5%. If it can hold on to that gain, it's going to be its best day since November of last year. Higher energy, though, means more inflation, means more action from the ECB. Yields are moving higher on the front end of Germany. Two-year yield up some 7 basis points, but it's still 60 basis points below its peak early last month. So we're a long way away from undoing what we've seen over the past 2 weeks. Dollar strength, that is petering out as we get closer to the U.S. Open. I got to say, somewhat surprising considering the U.S. is the biggest producer of oil. Considering if this moves the rate path higher, you would expect a stronger dollar. But maybe that picture isn't so clear. So euro and sterling basically unchanged versus the dollar this morning, Matt.
All right, so we see, obviously, the big movement all around oil, obviously, after the surprise OPEC Plus cut. We're joined for more on that by Carole Nakhle. She's the founder and CEO of Crystol Energy. She's an energy economist. Carole, great to get you on the program today. Let me get first your take on this surprise cut. OPEC had promised us it wasn't going to do this, or promised the market, I guess, and is now found out to be indeed planning on 1 million barrels of cuts, more than that, if you factor in what Russia's going to do. What does it mean to you?
Good morning. Well, look, I mean, I know that OPEC said, we heard some officials actually saying a couple of weeks ago that they are unlikely to change their production policy. But this promise was never really cast in stone because OPEC always told us that they were going to observe the market. So for me, what they did yesterday was not really a surprise. What came as a surprise is the fact that they announced it before their technical committee meeting today. So that came as a surprise. But the fact that they made the announcement on Sunday can also be seen as allowing the market to take in such a decision to avoid a big shock. Yes, we saw some upward pressure on prices, but not really the spooking of the market. So in a nutshell, it would have been naive to expect OPEC just simply watching prices stubbornly hovering around the lowest of the 70s without doing anything.
But Carole, you know, aren't we still waiting for, as China reopens, aren't we going to see millions, if not hundreds of millions of people start to drive around filling up with gas? I mean, isn't this supposed to be a big boost to the underlying commodity?
Well, this is what everybody almost everywhere expected when China announced the end of the zero COVID policy at the end of last year. And everybody thought that oil demand from China is going to come back roaring with vengeance, as we saw, for example, in Western economies. But we missed the point that actually the Chinese government did not really give generous handout to their people to spend it as soon as those restrictions, COVID-related restrictions, are removed. So therefore, the growth in China is happening, but at a much slower pace than people expected. And don't forget, the inventories in China are pretty full. I mean, they took advantage of buying cheap oil for a long period of time. And therefore, that growth in Chinese demand, this wow factor from China, has not materialized yet. It might happen later on, but at this stage, it has been so far disappointing.
Well, one inventory that certainly isn't high anymore is the SPR. We know the U.S. had been releasing those when Russia invaded Ukraine. And we know the American reaction to this is for the White House to call the cuts ill-advised. Job owning hasn't really worked for them in the past, Carole. So how does America respond to this time?
America is an interesting situation because they are a big consumer, but also they are the largest oil producer. So on the one hand, high prices are not really too bad for the economy. They can make the life of central bank more difficult because they are trying to tame down inflation. But again, we're not seeing massive increase in prices to talk about the macroeconomic implications. But at the same time, interestingly, this time the reaction from the White House is much more tamed than what we saw last year, for example, in October. It was just before the midterm elections when OPEC announced a 2 million barrels a day cut. The reaction of the White House was much more aggressive. But this time, ill-advised, ill-timed, not recommended, is really quite soft because the impact is unlikely to be massive given the macroeconomic concerns and the fear of recession becoming more of a higher probability, if you want, following the banking collapses in some major economies around the world.
So is it fair to say you don't think the White House, the government, will do anything? They'll just release these statements saying, hey, it's ill-advised, but not take any action further than that?
Well, look, last time they said that there would be consequences following the 2 million barrels a day cuts, and nothing happened. What they will do today, we'll have to wait and see, but I'm not expecting any major reaction. On the contrary, as you showed earlier, the energy companies in the U.S. are benefiting from this move.
How does Russia's calculus play into this, Carole? Because surely they need continued funding for their war in Ukraine. Are they getting that? They're gonna extend cuts that they already had put in place as kind of a reaction to the sanctions.
There are two things for when it comes to Russia, two main benefits. First of all, higher prices are definitely better news for Russia because they have been selling their oil at a discount compared to Brent. So the higher the Brent is, and if it's the same discount, then the higher the money they will take, of course, assuming that countries that are buying their oil are not abiding by the cap. So for Russia, it's a benefit to see upward pressure on prices. And also remember, what others cut, Russia does not have to cut. In this respect, Russia can preserve its production, its market share, while others are helping it to benefit from higher prices. And there's also the other dimension. Russia would like to see Western economies suffering, economically speaking, because the more they suffer, the lower their support might be in Ukraine. So while the Saudis are more conscious about not killing the goose that lays the golden eggs, the Russians wouldn't mind killing that goose if that means tilting the war in their favor in Ukraine.
Carole, Goldman says this move is going to lift oil to $100 a barrel for 2024. Does that sound reasonable to you?
Well, I can be very careful with making such forecasts because we heard these forecasts made before. We heard people talking about $300 a barrel last year. That did not happen. There is a very important factor that tends to be underestimated. That is demand. And demand is driven by the macroeconomic outlook. And there is a huge uncertainty today as to where we are heading in major economies around the world, from the US to Europe to China. So I would be very cautious making such estimates. And actually, if you look at the forecast for this year, for price forecasts, they have been downgraded compared to the over-optimism that we had at the beginning of this year. So I wouldn't be surprised. I mean, prices can spike, but they can also go down, as we saw since the beginning of this year.
Carole, really great to catch up with you this morning. Carole Nakhle, founder and CEO of Crystol Energy. Coming up, Donald Trump heads to New York today. We're going to discuss with Greg Valliere, Chief US Policy Strategist at AGF Investments. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an interview with Stanford finance professor Anat Admati. That's at 2:30 p.m. New York time. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Danny Berger in London. Now, Donald Trump's lawyer says he'll plead not guilty when he appears in court in Manhattan on Tuesday, or maybe Staten Island. The former president will also seek to have the case dismissed. He was indicted last Thursday, but the exact charges remain sealed. Greg Valliere, Chief U.S. Policy Strategist at AGF Investments, joins us now for more. Greg, let me first get your take on this zombie case that it seemed that this DA didn't want to pursue. A couple of prosecutors left the office angry about that. But now he is bringing it. A grand jury has indicted the former president in an historic move. Does he really have something here?
You know, it really strikes me, Matt, and good to see you, that we don't know what we don't know. No one's sure what's in this document. It won't be unsealed until tomorrow. It was pretty amazing to see all of these outraged Republicans talking about it as if it were already unsealed. It has not been. And it's going to be another 24, 48 hours before we know for sure.
So what are the possible charges that would be interesting, that would make us think Alvin Bragg has a smoking gun, other than, you know, just the hush money and the campaign finance moves that I think pretty much everyone in America assumes actually happened?
Well, two things I'd say in that. Number one, obstruction of justice covers a lot, as Richard Nixon discovered many decades ago. And it's possible there could be an obstruction charge in this, which is potentially more serious. And then maybe something about Karen McDougal. Everyone talks about Stormy Daniels, but Karen McDougal also may have gotten some hush money. She might be mentioned in this document as well.
What are you expecting to see tomorrow, Greg, in terms of a spectacle? Will there be one? Does Trump want there to be a spectacle as he goes to the DA's office?
Absolutely. This is his fondest dream come true. He's on the front pages of every newspaper. He gets to play martyr, and he's really, really good at playing martyr. And yeah, the circus is in town in New York. I wrote about that this morning. And this circus is going to persist not for weeks or months, but maybe for the next couple of years. All of these cases, these three big ones to follow, are going to be the subject of delays and delays and appeals and appeals. Trump can stretch this out into the election campaign of 2024.
Greg, there's got to be some fatigue about this. I mean, as Matt started us off, this is an old case. What happens to a political landscape where there is fatigue of this continued type of story and line of pursuit?
That's a really good point. I think for many Republicans, most Republicans, they're still crazy about him and they still feel he's their guy and they still support him. But for the country as a whole, it's a different story. And I think while Trump has improved greatly his chances of winning the nomination, his chances of winning a general election, I think, are increasingly slim.
Well, you know, a lot of people are also maybe don't think that President Biden necessarily needs to go another 4 years. The Democrats don't seem to have a lot more to offer. Is there a possibility of a third party coming in? I know it's a long shot. It always has been. It's something that we've been talking about for decades. But this seems like the perfect time for it.
It sure does. And there are candidates who are not being too coy, like Joe Manchin of West Virginia, who I think would love to run as a third-party candidate. So this group, this moderate group, I think is going to launch a third-party candidate. I think the chances of that third-party candidate winning, as you say, are slim. We'd have to go back to 1968 to see a third-party candidate win one state. That was George Wallace. So it's a long shot, but I think it's coming.
Ross Perot could have stuck with it. What about Liz Cheney, Greg? Does she have any traction?
I don't think so. I think if you want to look at these moderates who could be enticed, I would first look at the former governor of Maryland, Larry Hogan, maybe Sununu of New Hampshire. There are some people, but I think Liz Cheney elicits such strong passions among the Republican base. It would be an uphill fight for her.
I want to go back to this point of a third party. Does it come back in a way that you finally get a third party that is more sustainable, more structure to it, in that you don't just see maybe one pop up with more popularity, but actually the landscape changes and that a third party becomes, in the long term, more likely, more sustainable?
It could be. You know, I travel all around the country and I talk to lots of investors, and I'm struck at how many of them say to me, unsolicited, we need a third-party candidate. If it's going to be a race between Biden and Trump, I think that's a real turnoff for an awful lot of voters.
Greg, really great to get your thoughts this morning. Greg Valliere there of AGF Investments. Coming up, Tesla ekes out another record quarter by slashing vehicle prices. But is it enough? This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Danny Berger in London. Anna Edwards is off this week. Let's take a look at what's ahead. Today, Emmanuel Macron and Ursula von der Leyen kick off their visit to China. We'll be watching that. Plus, Fed Speak continues with Lisa Cook, and we'll get an exclusive interview here on Bloomberg Television with Jim Bullard. On Tuesday, tomorrow, Donald Trump, the first former U.S. president to ever be indicted, is expected to appear in a Manhattan courthouse or possibly on Staten Island. We'll hear about that a lot. Also tomorrow, Credit Suisse holds its annual general meeting. That'll be followed by UBS on Wednesday. Could be fireworks at both. And then finally, the main event, outside of political news and right back here in the markets, US payrolls report falling on a Good Friday. So wait, we won't even be here. Are we going to be here, Danny?
I don't know. Well, I'm not going to be here. I don't know about you, Matt, but someone will be here. FX markets are still open, so something's trading.
Yes, absolutely. And they could react to non-farm payrolls on Friday. So with that, let's move on to Tesla, shall we?
Let's do it, Matt. Well, they reported record deliveries in the first quarter of this year after price cuts fueled demand. But the issue for CEO Elon Musk is that the pace of deliveries fell short of his growth goal. Let's get over to Bloomberg's Alex Webb, who joins us now. Alex, how did these numbers match up to expectations?
So there are two sets of expectations we need to think about here. There's the market as a whole, and broadly speaking, it was in line with the 422,000 that the market had been expecting. The actual number came in just ever so slightly above that. But Elon Musk is saying that he wants to 50%, year-on-year growth. In those terms, it was only 36% growth, so it fell short of those expectations.
It still is a surge, right? I mean, still a record number of deliveries, better just slightly than the street anticipated. What's behind it, and is it the price cuts alone? And what are the implications for the next 3 quarters?
I mean, that's the key thing. These price cuts seem to have driven a lot of the growth, or at least got them to that number. And the reason that becomes a little bit of a concern for investors is that they then look at Elon Musk's 50% growth target and say, well, if we needed, quite sizable cost cuts to get to that 36% growth, does that mean there are going to be more to get to the 50% growth? The market's telegraph, analyst consensus is for 2 to 3 percentage point erosion on the gross margin in the coming months. That sort of speaks to the expected impact of some of these price cuts. Elon wants to hit 2 million units sold this year. The current run rate, he's short of that, so there needs to be an acceleration to hit it.
Well, he does have, fortunately, pretty fat margins, doesn't he, Alex?
I mean, he does, but there's a little bit of nuance in there because he doesn't capitalize some things that would typically be included from a normal car maker. So it makes their margins look a little bit juicier than perhaps underlying they really are.
Okay. Alex, thank you very much. Bloomberg's Alex Webb on the latest with Tesla. A record quarter, but maybe not enough for Elon Musk. Well, that's it for early edition. Surveillance is ahead. It'll continue. We're going to be hearing from St. Louis Fed President Jim Bullard, among others. Does an OPEC plus oil cut change his outlook? We're also going to be hearing from Lori Calvasini of RBC Capital Markets on where equity markets go from here. This is Bloomberg.